Welcome to Trading Lounge and the European indices. We'll look at the AEX, the Stock 50 and the DAX, and we've been using the AEX as an Elliott Wave template because it's had such a nice sort of structure with it, and it pretty much has reached our target zone here. It is sort of lacking a fourth wave as such, but pulling this apart from here down to here, appears that this smallish move here is the fourth wave, and then the fifth wave to this point. And on the US indices, we're also looking at a low being in place as well, and we're also looking at, in both cases, we'll be looking at an impulse wave up to this area here. So that means that will be 5 waves. We'll look at that on the DAX more so. So if we get 5 waves there, we're going to get a ABC correction, and then we're going to get another 5 waves here. So if I was wrong in any way, then from wave 2 here down to the low here, this would be the 38.2 retracement level here. So if this market was going to fail and I had it wrong, this is where it would, whoops a daisy, I need the need Mr. Squiggle here. So this if it was going to fail, then this, get this working, then it would be from this point, and if it failed, it would only have a move such down to here, then up from that point. That's so that 430 there is a sort of a critical point, and obviously too that's where supply is here. So and also too it's the top of group 1 as well, 10 1 2 3. So tested support on top of group 1 here would confirm that would be moving up from that area there, and support normally on this level will take a while because of the supply here. Well, because it's group 1 number 3, so if you're familiar with that, then you'll understand how it works. So otherwise we'll be looking to move up through here, and that's our primary count, but as a secondary count, this is where it would fail from. So this would be the same for the other European markets as well, all of them. So let's move in and have a look at the Stock 50 now as well. So on the Stock 50 here, I was expecting a larger wave 4 here. However, it counts as being, it does count as being complete down here. But once again, then this wave 4 here would be a catalyst for failure at that point. So we could say at the 2.9 here. So if I just copy this and put this here, and then we'll just dull that out as an alternative count, and I'll put it quite dull and I'll save that. But that's where it is. But at the same time, I know that we're getting 5 waves off the low here, so it's important that we trade it on that side. So this was also a 50-60% retracement area here too. If I can just go back into, no, don't have it there, sorry, I have to look at that on the DAX. Well, 2-hour chart. So yeah, look, in a nutshell, if we're not short, we might as well be long. So that's pretty much the case here. So there'll be other opportunities to get into this as well, obviously when the first 5 waves complete up here. But we'll look at that on the DAX. So here with the DAX, it's quite interesting. I mean, this, just going back over this from this wave 4 here and looking at this as wave 1 here, I mean, it's a pretty dodgy sort of wave 1, but it does fit. It's just but ugly, and it really suits more so as more of an A and a B and a C wave to here. So it's always been a bit of a debate, this one, and we're not out of the woods yet by a long way. I mean, the other side of the point too is this being an A and a B and a C here. The C wave is as sharp or sharper than wave C here. So that's another sort of no-no really in Elliott terms, because we'd expect to see the C wave moving down here on more of an angle here, not so sharp, in relationship to wave A here. So there's plenty of bearish signals here in terms of structure, but at the same time it's quite sort of it fits as a bullish pattern, and lining it up with the US markets is really what we need to do as well. So it's being a bit sort of philosophical about the whole thing, I have to say. But at the same token as well, from wave one top here, the 61.8% is that line through the here. So, and we can count 5 waves down here, even though I've mentioned the wave 4 is lacking somewhat as well in terms of size. But things do diminish, patterns do diminish into certain price points, so it's sort of acceptable. 4-hour chart here is just really sort of plotting the larger picture here, and that in mind, we'd be looking for 5 waves up to trading level 1, 10,000. And the other sort of important point here is that from wave B down to this particular low here, the 10,000 is the 61.8% mark, roughly. The bottom of the box is always the 50, and the top is the 61.8. So, what we normally find is that if we get 5 waves to the 61.8% mark, then then we know that we're on the right track. If we only got 3 waves to the 50-60% mark, then I would be more inclined to be bearish and seeing this as a rally at that point. So it's just another little thing that we'll be looking out for. So we're going to spend a bit of time just drilling into this a little bit here, if that's alrighty. So just on the 2-hour chart, the main point here is to cover any short positions in US and European indices, and look to go long with keeping the stop out of the way. Now, you may not be long already, and I appreciate that. It takes a bit of intestinal fortitude to chop and change, and it's not always in our sort of human nature to do that. So there will be other opportunities, and that's what we're going to look at now. So on the 15-minute chart, just sort of drilling in here a little bit. So wave 3 here, an A and a B and a C for wave 4. It wasn't the best wave 4, and I was expecting it a bit higher here as well. So that's a bit of a problem. So from this low here, we're looking at this move to the upside here, much the same as the S&P 500. So this number here is really important, and it will become important because this will balance out through here. This will go up higher here, but the correction will be across this level here. Now, that's 9,650, and you know that I'm always sort of harping on about that 65 number. Essentially, it's halfway between 8 and 5 here. So this is minor level 5, minor level 8. Very strong numbers. So, I mean, 700 and 600 comes into play, but when it's all said and done, this 65 number is more important, and I do harp on about it because it's not an obvious thing. It needs to be sometimes, and I'm like this as well. If you don't get it the first time, well, then it takes about 9 other times to to for the penny to drop, so to speak. So I'm just going to go to a 1-minute chart like I did on the S&P 500 and just have a bit of a look at this here. So taking a little bit of time to get itself together here. So I could have probably gone 2 minutes. So that's the low here. So we can see here that we've basically got wave 1 and 2 here, and then we've got 5 waves in here, 1, 2, all the way up to the third. So we've got 1 and 2 and 3 and 4 and 5. So we could say that's wave 1 and 2 here. Then wave 3 here. It's kind of interesting, really, because let me just check this. It looks like we might end up. It'll help us get the. Obviously, here, what I'm trying to point out here is that there may be a different count, but wave 3 is shorter than wave 1, so that will make wave 5 shorter. Or the other situation here is that this can be wave 1 here, wave 2 here, and then this is wave 1 of a smaller degree here. So it can be wave 1, just get this, take this off here, like that. It's not the right degree of structure, but just gets the point across here that that it's just a smaller degree of structure, that's all. So 1 here and 2 here, then wave 1 here and wave 2 here, I think looks a little bit more like that. But otherwise, we would be looking at this here now at, if this is wave 3, then wave 5 needs to be shorter than this wave structure here. So in this case here, we've got wave 1, 3, 4, and 5 here. No, I'd have to go wave 1 and 2 here. So this will go up a little bit higher here now. It's not not a great sort of wave structure as such, but it's got to head higher here. So we'll look at this as 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for the third wave here, and then the fourth. So we'll probably end up at 700 to 720 area here, and then we'll have the A, the B, and the C wave coming back here. And this is where the 9650 is going to play out quite nicely here, because once we get this move up here, then it will be around this sort of area through here that you'll be able to go long again here. We want this first 5 waves to finish here, and then have an A and a B and a C correction. And it's really good if it can come, it'd probably be at that 5-7 and 5-6 sort of zone here, and this will be the balance line within that. And that's good, because after it does, the classic trading levels pattern is what normally happens at a level. There's not much that can happen at a price point. So in this case, it appears that we've got the arrival, which is this one here, the reaction here, then the first high above the level, which is normally in 5 waves, and that's what we're looking at the moment, then the A, the B, and the C here, and then up from here. So then to get the perfect timing, it's over here on there as tested support. You can build in here, but you'll need to know that you've got 5 waves in wave C here, so you can build in here if you want to, but otherwise it's looking for support on this level. So this is the most common pattern at a level. There's a few variations on this, but it basically migrating from being resistance to support over here, and this is the pattern that it creates. So that could be helpful in re-engineering getting in here. Alrighty, well that's it. Thanks for tuning in, and it does appear that we've got a turn in the markets based on more so the US markets, but the European markets are certainly moving along with that as well. Alrighty, cheers.